Yeah, I mean, I obviously be naive to say that the AI story isn't a primary driver of the market over the last couple of years. I mean, clearly the focus on that, the amount of spending, the 800–900 billion dollars that we're seeing this year is a major factor. Obviously, what's happened in the semiconductor space is undeniable. So I'm not going to dismiss it, but I think it's a little bit different than what people generally perceive. So if you think about the kind of three sine curves working simultaneously, we've already been through the Mag 7 sine curve, right? The leadership of that happened for a long time, and it was very powerful, and it was frankly pretty nerve-wracking for a while to be that dependent on that small number of names. That has actually peaked about almost 18 months ago at this point. Interestingly, going to your debt concerns, is it happened about the time that they stopped funding purchases with cash flow and they started doing it with debt. So that's at least maybe a signal that we have to start paying attention to. The second sine curve has been happening recently, which is semiconductors. So you start saying, well, the Mag 7, the kind of hyperscalers, they're no longer the primary driver of the market. They're obviously the driver of the revenues, but now it's the secondary beneficiaries. It's power companies, it's semiconductors and things like that, high beta. Interestingly, though, people aren't paying enough attention to what I see as the third sine curve, which is every company represented in this room who has spent untold numbers of billions of dollars on AI infrastructure over the last couple of years and haven't gotten a dime in benefit from it. And we have, nationwide being probably a primary component of that, we're just throwing money blindly at the AI story for several years now, and it hasn't done anything for us from a productivity perspective. I can say in the last 6 to 12 months, I have become more productive, and most of my colleagues have become more productive. So we're now getting more with less. You see that with revenues, you see that with margins, productivity levels, in the CPI, the GDP numbers. We're seeing record margins. Part of that is frankly the semiconductors making so much money, but also companies outside of the tech space are seeing margins move up significantly higher. And this is the kind of free money aspect of the AI story, going from a cost center to a profit center in a very quick fashion that has not been, I don't believe, well enough discussed. Everybody talks about the hyperscalers and talk about the semis and talk about power companies. Not enough people are talking about the healthcare companies, the industrials, the financials that are seeing incremental benefit without the incremental cost, or at least those lines have now crossed over. You can go back to the kind of, probably not the greatest comparison considering the outcome, but kind of the MCI WorldCom days of, the stocks were the drivers initially. Then it became kind of the secondary phase when the broadband build out was happening, you know, and then it was all the other companies between that kind of '02 and '07 period where you saw value, small cap, international, starting to see the benefit from the internet build out, and obviously got rewarded so in terms of profits and stock price return. So I am absolutely a believer in the AI story continuing, but I think that there's a broadening in terms of who's benefiting, and it's not being paid enough attention to in the market. You look, frankly, small caps up 20% this year, value up about 17, 18%. International and EM both very strong. The average company in the S&P 500 beating the market cap S&P right now. These are not by accident, I don't believe, because I think it's this sine curve handoff from hyperscalers to semis to now the more blocking and tackling, boring companies.